Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday, it's September 16th. This will be our chart listing for the day, and it's really a real quiet, tight range day. Maybe this is still because rollovers going on and people are still rolling over, but there's not a whole lot of volume today. You can see how few bars there are between 8:30 and 2 p.m. Just not a lot of bars there. We're back and forth above and below the EMA. We're really stuck in a very tight range between 29, I'd really call that probably 29.93 and 3004. That's basically, so it's really about a 10-point range. That's big enough to have a range in there. There was a slight, this is like a little spike and channel up too, but this was more flat than anything. So I really, if you try to get your targets, if you measure that lower range right there, which is what we were in early, and you look for your measured move, you can see that's about what we got to. And we never got outside of that all day. So that would have been a nice range. This is actually your midpoint here. I usually make those dotted just to kind of clarify them. So there's not a lot of trades. This is not going to take long, but just a couple of things I want to go over. I get the same questions a lot sometimes. Um, and sometimes it's easier just to explain them on a video than try to explain them by email. But somebody asked me why I chose this level here as the low of my range today. Well, when I came in at 7 o'clock, prices started ranging here around 2 in the morning my time. And when I came in at 7, which is we're going up here, and prices failed and came back in, that's your price action from, that's 5 hours worth. That's your range basically. So that was what I marked. Yeah, if prices, it could have changed during the day and came down here and started bouncing here. But look, we bounced once, twice, 3 times, 4 times, and we bounced a couple more times here a little higher, but we're still inside that range. So why would you mark anything different? The whole idea is to read the price action. So the reason I marked it there is because that's what the price action told me to mark it. I didn't just pick that arbitrarily or randomly or anything. And it was obvious the highs here were the overnight highs, and we were trading within that. So that's what I marked. This was irrelevant down here because this happened from 2 o'clock to yesterday evening, Sunday evening. So, I mean, sure, it could have come into play before the day was over, but I would have changed things at that point. Sometimes these lines will drift a little bit, like here it drifted up just a hair. Late in the afternoon, I would have moved it up. It drifted up a little bit. And but you can see we never really changed up here. We actually drifted down some. We couldn't even get back up there. So hopefully that makes sense. The reason I mark that is because that's what the price action is telling you. All your highs are right here and all your lows are right here. Um, when you bounce that many times, that's a pretty strong support area. When you turn down that many times, that's a pretty strong resistance area. Same thing right here. Why did I mark that? Because that's where prices are turning each time. You got one little failed break lower. Actually, here we traded lower, but nothing closed down there. So that's telling you something. The whole idea is to read the price action. And that leads me to another question. Somebody else has asked me about um, some, I think he's talking about first entries, second entries. People will send me terminology and I have no idea where they get it from, why they're asking it in those ways. People ask me, I had somebody ask me on YouTube why I didn't do something because of the way Al Brooks teaches it. Well, I'm not teaching Al Brooks. I'm teaching price. Look, a lot of the things that me and Al do will probably be similar because we're both price action traders. But my terminology is different than his. A lot of the things I do are different than him. So doesn't mean you can't learn some of his stuff, but to come on to ask me why I don't do something he does would be just like asking him why he does something I don't. Why does he do things that doesn't do things I do? Because we see it slightly different. So I hope that helps. But one of the things somebody asked me was on a let's say we got a second entry right here, and I'm thinking if I understand him right, Forget that this is a range, just assume that we're trending up. You make a new high so the count starts over. You pull back, well, there's a first entry right there, and you didn't make a new high, and it pulls back again. So when it breaks right here, that's a second entry. He's asking me, does it matter if the second entry is higher than the first entry or if it's lower than the first entry? No, it doesn't matter. He asked me what my rule, why I didn't have any rules listed on that. Well, there is no rules. There are no rules on that. This second entry could be lower than the first entry or it could be higher. Generally, what you would like to see is your first entry and then it drop down and bounce off this trend line, and your second entry be lower than that. That would be ideal, but it doesn't matter. This is still a second entry right here. I probably wouldn't take this second entry because of the context of the chart, because there's too much resistance right there. You don't know that it's going to push through. It does, but you don't know that. That's a dangerous entry. So, you know, you could take and that's the other thing about asking scenario questions like that. That scenario could be different a lot of different ways. In this case, that scenario is no trade. So we are not pattern traders. Understand that. We're looking for these patterns, and that's a nice second entry there, but because of the context of what's going on, we're in a range. You don't want to enter long right into all that resistance. That's a no-no. That's against the rules. There is a rule on that. So here's another one. Notice you made that high, pull back first entry, pull back, and then when it broke higher, there's a second entry. Of course, your signal bar is not very good, but look what happened. It went right back to the resistance and turned down. You would have got trapped there, and it would have rocketed off the other direction, and you'd been in trouble. So in that case, really in this case, the second entry was identical to the first entry price. So actually, maybe not, because this broke lower and then turned and went out the other side. So you could have considered your first entry when it broke above that bar. But I could still consider this a first entry right here. You could just put your buy stop right above that big bullish bar. That's your first entry. Then it pulls back and it gives you a second entry, but it's equal to that one. It wouldn't have mattered if it was lower or higher. Actually, if it was lower and you had enough room to get out, then yeah, you'd take it. So it would have been better in this case that it was lower. So it all depends on the context of what the chart is telling you. And that's where some people seem to get, they miss that point and they just think we're pattern traders and they're looking for second entries all over the chart and failures. And, you know, you want to make sure you understand that what prices are doing. We're in a slight uptrend here because of this channel working higher. And you can see it's holding prices on the way up here. But at the same time, when you get in this range here, you still have to play the range rules on that range, especially one that's got that many bars in it. Same thing here. There's still another little range. So you got to take all that into account. So we're not pattern traders. So above anything and everything, make sure you understand that, because that's where some people get, you know, you can send me all the hypotheticals you want, but every answer, it might be different on every answer, and that's what some people seem to miss. And I think this gentleman that's asking me these questions is not taking into account, you can't just send me a hypothetical. You have to send me a picture, and that's the thing too. If you send me, if you have a question similar to what I just answered for him, you have to send me a picture with it that's very clear, that points out exactly where you're talking about. Because people will send me an email and they'll say, in your video at 2:35, what did you mean by this or that? And I mean, I don't have time to go look at the video and see what I said or did at 2:35, because I have to answer. I'm trying to trade myself full time. I'm trying to answer 50 to 100 emails a day, and it's not that I'm being lazy and don't want to go look it up. I don't have time. And so it helps me by you helping yourself by sending me a picture, a very clear picture, and clearly pointing out where your question is. If you do that, I always answer every question. But if you send me a complicated, 10-piece question and no picture, if I can, I'll answer what I can, but I'm not going to go look. I don't have time to go look up different charts and go look in the manual at page 10 or whatever. So I just don't have time to do that, unfortunately, and I apologize, but it's so much, it's so much easier for you to go ahead and send me the picture of it than me to have to go look it up, because I'm having to do it 50 or 100 times a day. And so please, I ask you to to send me the picture. And if you don't, I may not answer your question. So if you don't get an answer back, or you get a convoluted answer back, you'll understand, please understand why I'm asking you. It's not because I'm lazy and don't want to help you or don't want to go look it up. I just don't have time. And I'm stretched thin as it is. So just keep that in mind. But yeah, the context of what the chart is telling you is everything. Because what you do on a second entry here might be totally opposite of what you do on a second entry on a strong trend day, like in this trend right here. There's a second entry right here. It's not a very good one, but there's a second entry right here. And if it had been a good second entry, I'd have probably marked it. But I didn't. And people will ask me, one thing too I'll ask you to do is wait till the end of the day and watch the video to see if I answer your question, because a lot of these questions I will answer during the video, and by you sending me an email, I'll have to answer it twice or three times, because a lot of times the same thing that trips one person up will trip up multiple people. So I would ask that you wait till the end of the day of the video to see if I don't answer, and if I don't, then feel free to send me the question. I don't mind. That's part of what I like about this. Researching the questions and answering them helps me as well, because it keeps me on top of my game. It keeps me, it's good for both of us. So that's the main reason I do this chart list. That's the reason I used to originally started doing it, was to, this is what I did every day for myself. I'd go through and mark all the trades, and I'd study them. I'd study this chart, and I'd figure out every trade. I'd look at my trades and compare them to what I saw after the fact, and then I would mark the trades that I did, all of them, whether I saw them or not. And that's what makes you get better at this. Just sitting here and trading all day, and then at the end of the day closing up and going home and saying, hey, I made money today, or hey, I lost today. That doesn't make you a better trader. What makes you a better trader is learning your own tendencies and improving on them. Study every trade. Figure out if sometimes you'll get lucky on a trade and it wasn't even a good setup, and you may not see that until after the fact. Other times you'll take a trade and can't figure out, it's an instant loser. Well, study it until you figure it out, and if you can't figure it out, send the picture of it to me and ask me, and I'll try to help you with it. Because one time I used to think that some trades just failed. But I don't believe that anymore. I think that every trade, if it failed, there's a reason it failed. Good trades don't just fail. Either it was a trap or you misread it. There's some little piece that you missed. And as I've done this over the years and gotten better at it, I've learned that if you follow the rules and do everything perfect, you'll still have some losers, but it's not because the trade didn't work. It's because you misread something. 99.9% of the time because you misread something or you just got trapped. And that's the whole idea behind a trap. They fool you. You take a trade and usually real quickly if you got trapped, because it almost turns instantly. And it rockets in the other way. When it rockets down, like right here, when this broke on through, the longs realized they were on the wrong side and finally exited. And you see them all jumping out right here, and it runs down. And then it gets to be down here where people have been buying up before, and they all said, hey, this was a good place to buy before, and they buy again, it runs back up. And this is where people have been selling, and a lot of people probably got left behind the first time, so they jump back in, and you just chop up and down. That's kind of what's going on here. The buying dries up here, and the selling overtakes it, and then it drops down here, and the selling dries up and the buying starts to overtake, and it runs back up the other way. In this case, we got a little further lower. They run a bunch of stops down here and get the shorts to load up, and then it runs the other way, and all of them have to exit. And that's kind of what a range day is all about. You want to look to buy down here and sell up here. Sometimes you may break on through and get a failed breakout. And somebody asked me that today. Where do you enter on the failed breakout? Well, it depends on the context of the chart. You may not even take a trade. You may just watch it. You don't necessarily enter just because there's a failed breakout. But what I'm trying to get you to understand is that when prices break out of the bottom of a range, the likely outcome of what's going to happen is prices are going to trade back up again. They're not going to continue to go down. Just like right here, they broke out below this low right here, and they quickly failed and started trading back in the other way. That's the gist of what I want you to learn. Then you got to learn where to enter. That's the second part of it. So there's not specifically any place you enter. You got to wait on the setup. And there is no setup down here. You don't get one, so you don't take a trade here. Same thing when this little failed breakout here. You never really get a trade until here. And I'll explain that trade in a minute. And that's what you want to look for, a setup that says, hey, it's okay to go short now. Same thing right here. I'll explain this to you in just a minute. So I hope that's helpful to you. For those that ask the questions, I hope that's helpful as well. I think it's a lot of times just easier to try to answer these questions in the video than it is to try to email you. But anyway, let's talk about the trades. I did that today because there's not a lot of trades. They won't take long. This was a really quiet, boring day. Just not a lot of setups, not much going on here. Anyway, when I came in, we were mostly going sideways here, but you could make the argument, especially when it bounced here, you could make the argument that, hey, there's a trend channel working up, and there is, because all you had to do is draw this line up these first few here, and you drag it down, and it seems to be fitting down here as well. And 7 o'clock came right up through here. We got a little failed breakout. You might have considered that entry right there. You're almost always better off to wait on a lower high, which didn't come till here, and it's not a very good setup. It's right back into the EMA. You're still closing above what was resistance, and it's kind of acting as support. That's not a good entry, even though it's a lower high. And this one is a little bit away from the EMA. It is a relatively bearish bar, but it's an inside bar, and they're not as reliable. The trend line's still working up here. There's no real close outside till here, so you may push up again. If this is a range, the measured move is way up here, so if this bounces, it's going to go against you. So it's just not a good place to enter. So just skip that trade. And then we drop down here, and we're just kind of going sideways. There's still a little upward bias. Look at that EMA pointing up. So even though we're going sideways here, we've been making higher lows and higher highs, and looks like once again we're making some higher lows. But notice how it makes that low right here and bounces, and it tests it again. Tests it again. That's close enough to say you had a double test, but it also bounces off the trend line and gives you a big bullish bar. But more than that, you made a low here and you tested it once, you tested it twice. You can see two bearish bars coming down there. Again, it's right off the key entry point, which is the trend line. Where are the key entry points? I probably don't say that enough, but I do say it a lot. They're the trend lines, the EMA, and the support lines and the resistance lines. Those are key entry points. It's basically just your support and resistance where things happen, where all your moves or bounces take place. Those are the key entry points. And if you look, where did all your big moves come from? Where did this move right here come from? Off the key entry point of both the lows and really here it's more the trend line. Where did this big move come from? And of course, it's not a huge move, but for today, this is the big move. Where did it happen at? Key entry point, the trend line. Again, support line. Where did this big move come from right here? Again, off the key entry point, the support right there. Really, you could just look at the midline right there, same thing. Where did this big move down come from? Off the resistance, key entry point, off the trend channel line and the resistance. Normally, you wouldn't be too interested off the trend channel line because the trend is up, but this has a range fill and a sideways fill, and with a double test there, I'm okay with that one. Where did this big move come from? Strong support, the midline of that was the support resistance line of the main two parts of the channel. Look at it go. Same thing coming back down. It's where everything happens at the key entry point, so keep that in mind. But this bounces here, nice bullish bar. Normally you'd be a little concerned about this, and you probably would still keep that in mind, but the fact that we just pushed through has probably cleaned everything out. So if we go high, if we break higher, we're probably going to push on up to a new high and keep the trend going, and that's what happens. We ended up going right back in another tight range, but notice what happens. You make these highs here, you come back, you test it once, you test it twice, And you got a new swing low there. This is lower than this swing low. See how you broke lower right there? That's a swing low, and then you push lower here. So that's a new swing low. And you can count both sides. I don't want to complicate it for people. If you're new, forget about failures. Just look for second entries. But notice that new swing low, first entry short, that's a second entry short off a double test in a range, and there's plenty of room to get out before here. And so I like that short. And even if it bounced there, you had plenty of room to get out. It even goes a little lower. And notice we're just still in the range, but that's a failed break lower, but your signal bar is not very good. You need to be able to get in right here, and you could have ridden it back up. You get another good signal bar here, but you don't have room to get out. Again, it takes off, but you don't know that ahead of time. So there's not really a double test there. So we just run up and we start going sideways again. So you're playing the range rules all over again. This looks like a little repeat pattern of this one right here. You made that high and you come back, you test it once, you test it twice. There's also a new high, so first entry, second entry, it fails. And if it breaks lower in here, we're probably coming back down to here, and we may come back to this trend channel line, the midline, and we may come all the way back down to here. So you probably want to take that trade. And notice how we pushed through here, so we probably cleaned it all out right there on that. Notice how it failed the first time it broke loose lower, it failed, and that's what you expect to happen. So that's the reason you don't want to be going short down here. Anybody went short right there got burned because they weren't paying attention to the range. So keep that in mind. Normally on a range, you'd want enough room up, get short way up here and have enough room to get out before here, but we've already come through and cleaned it out in the second entry, and we're closing way below that. So we run down here, and what happens? Same thing, we start going sideways again. This one was very tempting right here, but look at all that support. You don't want to get short into that, because what will happen, it'll break out and fail and turn back. And in this case, it would have worked, but you don't know that, so you can't take that trade. You want to wait on the failure. Notice how it fails way down here, way away from the EMA, way away from the high of the resistance up here. We're probably going back to at least there. Easy trade, run back, and notice what happens. It starts finding resistance right there again. It starts finding support right there again. We don't get another setup. You get a higher low right here, but look at it. Where does it do? It goes back up and tests the high. And here's one where you get a nice bearish bar, but you're almost always better off to wait on the lower high, which comes here, and then that's a double test because you made that high, you test it once, you test it twice, big bearish bar, you're still away from the EMA, and in this case it runs all the way down to the lows again. It misses it by maybe a tick, but that's what you hope for on a range. You know, the idea is to get short up here. And you could have argued for this one, to be honest. It's still a little ways from the EMA. We did have a break of the trend line. We don't quite have a new high in place though, so you really want to see a lower high. I'll mark that one green because you may take that one if you want to be a little aggressive, but I think you're better off to skip it. And then there's your lower high, and look at it go. And notice what happens here. There's a new high, you get a first entry, and you run all the way down here, and you get a second entry, and it fails, and there's a little breakout pullback. Notice all that support, it pulls back and tests it and gives you a nice bearish bar. First break of that trend line, and we're probably headed down here. There's enough room to get out anyway. I like that one. Runs down, and it actually bounces a little sooner this time, so you may have adjusted this up one notch just in case it comes back again. But you're running up. There's actually a failed second entry short right there. Context is not good. Everything's still below the EMA here. It's not a very good signal bar. Of course, on a failed second entry short, that doesn't matter really what your signal bar. It's the one time your signal bar does not have to be a trend bar in your entry direction, but you don't want to be entering into that EMA because this is what happens. It pushes up and it fails, and it comes back and then has to run up again. And you actually get a second entry here, but look how bearish that bar is. So even though it works and takes off, you just can't enter there. You get a higher low here, but again, not a very good signal bar. They have matching lows, so you could consider that one a signal bar. But look how big it is. It makes a double top. It's right there at the support resistance. It could easily hit that and turn down again because you've already had a break here. So again, not a good place. You start just kind of bunching up congestion here because you do get a double test here, and this is a pretty bullish bar, but you don't want to be going long way up here because you see what happens. It would have still worked, but you would have had to ride all this out. And this just kind of takes us into the 2 o'clock hour. And what's going on here at 2 o'clock? Or in this last, I shouldn't say, this last from maybe 1 o'clock into the 2 o'clock hour. What's going on again that we just talked about all those times? We did this all day long. Prices move and they just go into these little ranges and start going sideways. This one, really most of your resistance is right there. And you can see that. Once again, you're going sideways. There was a good long entry right here. You probably could even argue for that one because there's enough room to get out right before you get back up here. This one makes a new high, first entry. You can get a second entry. This is the way you want it to look, though. You get a chance to get in way down here. Of course, it bounces around, but it still would have worked and got you out. And that's what you're looking for. Not after 2 o'clock. But once we started going sideways here, I probably wouldn't have entered on that one. You might have entered one of these because now you made this low and you get a double test, and so you might have entered there. Again, if it wasn't after 2 o'clock. So I hope that was a helpful day. A lot to learn there and pick up in one day, but all good stuff that everybody needs to know about. But I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.